It took me almost 3 years to find this strategy that finally took me profitable, and I want to teach it to you today in only 2 minutes. Now, every single day coming to market open, I'm looking for 4 levels on my chart, okay? I'm looking for the previous day high zone, and I'm looking for the previous day low zone. So I mark those up every single morning, and on top of that, I mark another 2 zones, and that's going to be the pre-market high zone, which is this blue dotted line over top, and the pre-market low zone, which will be this blue dotted line in the bottom, okay? Now we can see that the pre-market high and the pre-market low is chopping in between the previous day low and previous day high. Now this is telling me we're in a consolidation period, and anything inside the pre-market high and the pre-market low, I typically avoid because it is notoriously choppy. And look what happened today. Today we opened up and it's pre-market high and pre-market low were here. And all day we chopped in between. And today I literally took no trades because, like I said, if we're in between these two ranges, I never look for a trade. But tomorrow coming into market open, what I will be looking for is a 15-minute close above our previous day high zone, which you'll see here is a pretty pivotal zone because we've had 1, 2, 3, 4, 5 rejections from the zone. So when we get a nice 15-minute close above this zone, I'm going to be looking to go long, and vice versa. If we get a 15-minute close below this zone, which we've had 1, 2, 3, 4, 5, 6, 7 touch points, a nice strong area that's been holding, I'm going to be looking for a short. And typically what I do is I want to see a 15-minute candle close, not a 2-minute, not a 5-minute. I want to see a 15-minute candle close because that's going to avoid me from being faked out. And that's going to give me extra confirmation that the bias is in and the direction has been chosen. Because if I'm watching a 2 or a 5, it could easily show a really weak candle and then right away reverse on us. But with the 15, typically this doesn't happen as long as there's no giant wicks at the bottom or at the top showing indecision. I'll know for sure that that's a confirmation candle. Okay. So when that does happen, when I do get a 15-minute candle close, what I typically want to see is something like this: a nice strong close below, a retest, and then a continuation down. So how do I enter that trade? I switch on the 2-minute and then I'll look for my entry, right? I can't really enter on the 15 because it's just going to be too big of a range. So what I like to do is I like to switch on the 2-minute once the 15-minute confirms, watch for a nice bear flag retest into this zone. And as soon as I start seeing some weakness with a nice confirmation candle, I will be dropping a short right around there. And I'm looking for at least a 2R risk, meaning I want to make $2 for every dollar I risk. And that's all I do every single morning, whether it be upside or downside. Those are the 4 rules that I use every single day. Hope that helps.